Hello and welcome to this Wednesday's morning market briefing. We've got a lot to talk about, but firstly, NATO plans $100 billion Trump-proof fund for Ukraine, as well as that US investors turn more cautious than Fed on 2024 rate cuts. We've got lots to talk about in the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is of course on the topic of NATO and Trump. Now, NATO is reportedly in the process of drawing up plans for a 5-year aid package of up to $100 billion for Ukraine, and this comes as fears that a second Trump presidency could destroy any potential to continue the needed foreign support for Ukraine's war efforts. Now, this is most certainly not the first time that we've spoken about NATO, nor Ukraine, nor of course Trump, and all of these topics are now winding up in this key article here. But you know, in the midst of all of the articles which we've spoken about, whether that be on Trump, whether that be on NATO, where that bill in Ukraine, you know, they've all kind of linked to one another, and here we're really seeing that culminate. And this is largely because of Trump's politicization of the kind of conflict within Ukraine and the support, you know, the kind of topic of supporting Ukraine. We know at the start of Russia's invasion into Ukraine, of course, most of the NATO allies, basically all of them, even Hungary basically, were supporting Ukraine in their defense against Russia's invasion. We know that those nations were, whilst they were kind of hesitant on the supply of lethal weapons and aid to Ukraine, they were most certainly very open to supplying things like humanitarian aid and small arms, and that's what we did see take place since the start of the conflict within Ukraine. You know, a great deal of Western support flowing into Ukraine, as well as that, you know, a great deal of refugees basically taking refuge within the closest European nations to Ukraine, and we know that many of those refugees have now returned back to Ukraine, as you know, it has stabilized more so within the more western parts of Ukraine. So ultimately, you know, the West has supported, NATO has supported Ukraine greatly since the start of the conflict, yet despite that, as we've seemingly moved into the kind of later periods of kind of the conflict, hopefully, but yeah, basically as time's drawn on, it seems like certain NATO partners, certain allies, and especially the US has become kind of especially kind of wary of, you know, certain issues within Ukraine around corruption and around what, you know, the actual goals of supplying aid to Ukraine actually are. And you know, these kind of worries and these more, you know, kind of skeptical views around aid for Ukraine have largely originated, of course, from the Trump camp, from the more hardline Republican side, where, you know, those individuals are more so isolationist. They want to only focus on the US. They want to prioritize US jobs, US businesses, and, you know, basically keep all US tax dollars within the US, of course. And so it makes sense why they would be the first ones to speak out against, you know, the potential aid flowing to another nation, especially when that nation is across the pond within Europe. So that's where we've really heard those kind of that kind of rhetoric from that specific camp. Meanwhile, the Biden administration has, of course, you know, openly supported aid for Ukraine and really pushed for it. And in this most recent effort to supply Ukraine with aid, we know that the Biden administration has been pushing for approval from Congress for this bipartisan aid package for Ukraine. But as I've said, you know, Trump's kind of opposition to such a kind of agreement has led to many Republicans, you know, definitely kind of impeding on the process of getting that aid package through Congress, and as a result, we're not seeing the shells needed being supplied to Ukraine, as ultimately the US is the powerhouse of NATO, and ultimately if we're then seeing a halving at least of the aid going to Ukraine, that's certainly going to have an effect on Ukraine's war efforts, and we're already seeing that in certain places, namely Avdiivka and others on the more kind of Donetsk front. Ultimately, though, NATO has remained very, supportive on a whole for Ukraine, especially within Europe, where partners have, provided their own aid packages to Ukraine outside of NATO and outside of any US support. That's been very key with the UK as well as the EU, of course. So ultimately, NATO stands strong with Ukraine, and we know that the likes of Sweden and Finland have joined NATO to not only support Ukraine but also to defend themselves against Russian aggression. So ultimately, that more European side of NATO still stands strong together. It's the issue within the US which is being highlighted here, with the Trump-proof fund being generated and produced for Ukraine, which is being highlighted in the fact that the worry is that if Trump comes into power, ultimately aid will cease to go into Ukraine, and Trump will not only restrict aid from the US but also massively restrict European aid as well, as of course the US, as I've said many times, is kind of that leading figurehead within NATO. So this is a very important article to talk about, and one that will be definitely affecting world tensions and therefore playing into the markets such as gold or oil. Now, these plans are being branded as the so-called Mission for Ukraine proposal, and it will be discussed by NATO ministers on Wednesday after the NATO secretary put it forward. The proposal would collect support from 32 members to form an estimated $100 billion in aid, with the NATO secretary Stoltenberg saying that the proposal will act as a means to shield the mechanism against the winds of political change. And if such a proposal was to be approved, it would give NATO the control of US-led Ramstein weapons support group and allow it to manage the supply of weapons to Ukraine. And that, of course, is a very, very important kind of thing to note here from this proposal, as ultimately, the reason why there's been limits sometimes on whether Germany or Sweden or the Netherlands or Belgium or Denmark can send certain equipment to Ukraine is ultimately because it is from the US, and therefore the US kind of has that control over where that equipment does actually end up. So, whilst Denmark might want to send F-16s to Ukraine, I'm not sure whether they do actually have F-16s. It still has to be approved by the US, as ultimately they are US produced and for US eyes and whoever the US kind of commissions to have a look at them. So that's why this is a very important proposal. Now, the effort by NATO comes at a time where the Biden administration is struggling to get the approval from Congress for a $60 billion Ukraine military support package. Now, Stoltenberg is hoping to reach an agreement before the NATO leaders summit in July, and Trump has made his opposition to such support very clear and is politicizing the matter heavily in the lead up to the 2024 presidential election, which is set to take place in November. Unlike the much larger bilateral aid bill from the US, which is currently held up in Congress, in this joint NATO proposal, the US would only need to provide a little over $16 billion. So a very important article to highlight here, and a very important topic to keep your eyes on, which is affecting world tensions greatly. So definitely keep your eyes on all of that. That's all to talk about on this article. Next article to talk about is on the top of US investors and interest rate cuts, which of course is a very important article and a very important topic which we cover probably in the most detail and most often out of all topics. Now, investors have now become more cautious of the Fed actually cutting interest rates much this year. This comes following a series of pieces of strong economic data, which is leading traders to believe that the Fed could actually cut interest rates less than 3 times this year. Now, ultimately, we've covered this topic, as I said at the start, many times over, and this is largely because, of course, whatever the Fed chooses for its interest rates for the future of the Federal Reserve's monetary policy, this pushes the entire US market, whether that be the US equities market, whether that be the dollar, or whether that be US oil, or anything related to the US in any sense, or even world markets, just because of how powerful the US economy is and how many kind of pots the US does have their hands in. So ultimately, this is a very important article on a very important topic, and what this article actually highlights is a kind of change in perspective once again from investors and the Fed, kind of from what we've kind of traditionally been hearing. And this kind of US investors turning more cautious than the Fed is actually showing that maybe we've seen a change now in outlook, which will then convert over to the Fed, and then we'll see that kind of play out in the markets. Now, ultimately, what are we seeing here? Well, what we're seeing is a series of strong economic data and high inflation figures, which is causing US investors and traders to ultimately be more hesitant of the idea that the Fed is going to cut interest rates more than 3 times this year. As ultimately, as we've spoken about many times, since about November last year, US investors have been very dovish on the markets following a change in inflation figures, and as a result, US investors have been expecting rate cuts as early as March. Of course, we now know that is certainly not the case, but this was a large change from the more hawkish rhetoric that we were hearing from the Fed last year. And so as we entered the new year, this kind of dovish opinion continued. That said, we did start to see investors also become more kind of hesitant of that fact, as the Fed made clear that they were sticking to that kind of 0.25 percentage point interest rate cuts this year. And as a result, since then we've seen the dollar, for example, begin to rise back up to the levels that we were actually seeing November last year. So certainly the markets have been moving greatly recently in regards to this topic, and what we're seeing here is US investors now completely changing their perspective from that more dovish outlook that we saw maybe beginning November last year, to now one which actually represents more so what we were seeing from the Fed maybe October, September last year. So very interesting article to note here, and something that's going to be definitely affecting the markets greatly, with swap markets now pricing in just 0.68 percentage points of cuts for the whole of 2024, and this of course is fewer than the Fed's own expectations of 0.75 percentage points of cuts. In addition to that, traders are now also expecting the Fed to cut rates even later than previously expected, with the swap markets putting the odds of a rate cut in June at around 63%. This comes following data showing the US economy to be growing, but inflation has remained sticky. All of this pessimism over rate cuts comes following months of markets actually expecting the Fed to make more cuts than themselves were actually expecting, but last week's inflation figure of 2.5% has changed investors' outlooks, it seems. So definitely a very important article that we've covered here. I know we've spent a while on the articles anyway, but certainly 2 very important articles that we've covered in great detail, and I'm hopeful that you can kind of apply that to your outlook within the markets. That's all to talk about on the articles though. Next to talk about, of course, is the charts. Beginning, of course, on the US 30, the Dow Jones, to talk about US equities more as a whole and US indices. But yet, certainly, to start on the US indices makes this a very interesting topic to talk about, as ultimately we've seen a great deal of volatility within the US 30 recently, and arguably the article that we did just talk about in regards to US investors becoming more pessimistic over rate cuts is arguably also now pushing the US 30 to the downside, for example. And if I just look over to the Nasdaq as well as the US 500, all of those indices yesterday, did sell off greatly. So certainly we're seeing a great deal of bearish momentum following this change in outlook from investors over the inflation figures that we have received and that kind of thing. So certainly it seems like that more kind of hawkish outlook from investors, pardon me, it's my nose, from investors is now translating into markets greatly. That said, markets are now beginning to kind of respond back to the upside, as we can see here on the US 30. Whilst price did break below this key area of liquidity and support that we noted as like one of these kind of last line areas when price kind of comes down and then has the chance to continue higher. Ultimately, that line has been broken, but price is now once again kind of moving back to the upside. The question, of course, is now whether price will kind of come back up and break once again above this area of liquidity, or in fact will price move to this area of liquidity and then continue to sell off from that area and continue to the downside. Of course, this is going to depend greatly on the news that we do hear from the Fed, as today we are having numerous Fed official speeches, as well as, of course, and most importantly, Jerome Powell's speech. So definitely that's going to be messing with the US 30, that's going to be messing with US equities and pushing it one way or another, depending on Jerome Powell's rhetoric, as of course the recent inflation figures, the recent manufacturing figures, and today's services and business figures, as well as mortgage data and employment change data from the US, is definitely going to influence the way Jerome Powell talks, and whatever he says is definitely going to then push the markets one way or another. So definitely keep your eyes on the US 30. Markets are going to be very interesting today, and that's something you should definitely be keeping your eyes on in regards to the US and that kind of thing. That's all to talk about in the US 30 though. Next to talk about, of course, is the dollar. Which has seen a great deal of kind of bullish momentum recently, and starting off the week we did see price push up into ending off last week, pardon me, we did kind of see price push higher, and then to start off the week we saw price push once again even higher to the upside and into this key liquidity zone that we noted as a strong area of kind of bearish liquidity, and a great deal of sell orders were expected to be within that area, as that area did mark the kind of final bottom of this range that we did see form not too long ago back in October, before of course that change in rhetoric starting in November. So most certainly it's a very key area which price has now moved up into, and we've as a result seen a sell-off from that area. That said, a great deal of kind of appraise kind of needs to be well, not appraise, but but kind of you need to kind of understand that whilst price has sold off from this liquidity zone, whilst price has reacted in a bearish manner from this area, ultimately the fact that price hasn't sold off greatly from that area and has just kind of had a short retracement tells us that ultimately there's still an overwhelming amount of kind of bullish momentum within the markets, a strong bullish outlook for the dollar, and that's added to the from that second article, pardon me, that we spoke about in regards to the Fed keeping interest rates higher for longer and having less interest rate cuts this year than previously expected. So all of this is definitely helping keep the dollar higher, but certainly these areas of liquidity are acting as areas of resistance. Next to talk about though is Euro USD. Price interacted with this liquidity zone that we noted in yesterday's market briefing, and as expected price did move once again to the upside. The question is of course whether price will now make its way all the way up to this area of liquidity before then maybe continuing lower, or in fact are we now at a level which is sufficient for price to then continue this fall to the downside. So definitely keep your eyes on Euro USD. Next talk about though is pound yen. Not much can be said on pound yen. As I've said, recently price has been kind of consolidating, ranging, not much has happened. That said, as yesterday price did drop lower, well not yesterday, pardon me, on Monday price did drop lower, and then yesterday it seems like after coming into contact with that Fibonacci level of the 61.80, price is now back on the move to the upside. That said, we're not seeing an overwhelming amount of bullish support, and that level of 78.60 is still certainly a more key area of bullish liquidity, which price still may make its way down to before then moving higher. So definitely keep your eyes on pound yen. Next to talk about though is Bitcoin, which has seen an overwhelming amount of bearish momentum beginning of the week, with Monday seeing a large sell-off and yesterday that continuing to be the case. That said, price has now interacted with this 61.80 Fibonacci retracement level, and prices reacting in a bullish manner from that area. That said, we're not seeing the same amount of bullish momentum from that area as we've seen from other areas, but ultimately this could be an area which then price now continues to the upside after this short retracement. But still be certainly I think a bit hesitant hesitant on the way that Bitcoin's moving at the moment, as one could definitely say that a reversal is being formed. So definitely there's a lot of price action to look out for on Bitcoin. Next to talk about though is gold. Gold is just continuing to push higher, and now we're certainly nearing this Fibonacci extension level of minus 27.2. The question is then whether, if price comes into contact with this level, or when price comes into contact with this level, will we then see a kind of reaction to that zone, a sell-off and that kind of thing from that area. So definitely keep your eyes on gold. Very interesting levels that are being made currently, and prices of course miles away now from those previous all-time highs, a full 6% higher than those previous all-time highs. So incredible price action recently on gold. Lastly to talk about though, of course, is oil, which is in an interesting position after continuing to climb yesterday. An overwhelming amount of bullish momentum on oil at the moment, and arguably this is largely because of the heightening regional tensions within the Middle East. We know, as I mentioned in yesterday's market briefing, there was a suspected Israeli airstrike on the Iranian consulate in Damascus, killing 3 of the Iranian Revolutionary Guards members, and the suspected kind of reaction from Iran could of course cause a conflict to spur out between those two powers, and then involve other regional proxy networks and that kind of thing. So certainly keep your eyes on that area of the world, as that is affecting oil's price greatly. So keep your eyes on oil though. That's all to talk about in the charts though. Lastly to talk about, of course, is the economic calendar, where we're getting lots of very important data today, or pieces of information. So definitely listen out for all of this to come. Firstly, we're getting the Chinese business and services data, followed by the Italian unemployment rate figure, and then the Eurozone inflation rate figure. Followed by that, we're getting the Eurozone unemployment rate figure. So 2 very important Eurozone figures there to listen out for. Followed by that, we're getting the US mortgage data and employment change figure, followed by the US services and businesses figure, and followed by that numerous Fed official speeches, and most importantly, to end off the day, we are having the Fed chair Jerome Powell speaking, and his rhetoric will be pushing markets up and down one way or another. So definitely keep your eyes on that speech, listen out for that, and definitely keep your eyes on all the markets that we've spoken about today. That's all to talk about in the economic calendar though. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.